Hello there. This is Alan Kendall, and here's a graph of Credit Suisse of loans that have been reset. These are the subprime that reset in 7 and 8 primarily, and these are the Alt-A and offset adjustable rate loans that adjusted in 10 and 11. And down here below we have a mutual fund XLF of the financials, and we see that when loans reset, financials took a hit. And when loans reset more, financials took a bigger hit. In 2009, when the subprime loans were essentially dwindled down, we see that financial stocks, they rallied. And so when loans started resetting again, the Alt-A and offset rate loans in 10 and 11, financials took a hit, and then when loans reset more, financials took a bigger hit. This means that after loans quit resetting, which is going to be, this graph shows April of 2012, but actually loans have been pushed out till October of 2012 here. If we look at this this recent graph here, it shows us that around October of 2012, these loans have been pushed out, the resets. The banks were having problems with recording the defaults, and essentially they pushed these resets out. So what happens is after October of 2012, the financials are going to rally. Notice that when loans reset, financials fall. When loans reset more, financials fall more. When loans quit resetting, financials rally. When loans reset some, financials fall. And when loans reset more, financials fall more. This means that after October of 2012, financials are going to rally big. And just buying this mutual fund XLF in 2012, holding it throughout 2013, and then selling it in 2014 should be a simple way of doubling your money. And that's how you can take advantage of this. I noticed that Warren Buffett was buying Washington Mutual back here in 2009. He bought Bank of New York. He also bought Bank of America. And so Warren Buffett is buying financial stocks. If you do a Google search and you divide the net profits by the assets, you'll see that or the price to book, you'll see that or the price to assets, you'll see that the most of the companies that show high profits with low prices or low price to books have they're mostly their financials. And this means that the financial sector is very undervalued, even for the current earnings that they're making. And after October 2012, their earnings are going to go way up, and the entire financial sector is going to go up. And so when is the best time to buy these financial stocks, XLF? Typically, March and October are the best times to buy. And so if we buy financials like XLF, this mutual fund, in March of 2012, after the industrial slowdown, January, February, you typically have a pullback in the stock market when manufacturing slows down after Christmas. And then also you have the typical August, September, October pullback when the first and second quarter announcements comes out, and they typically are weak, and they weaken the stock market. And so those are typically good times to buy, to jump into this XLF. And you want to hold it through 2013 when the financials recover, because their earnings will go up when loans quit resetting and short sales cease. Also notice that because loans are resetting in 2012, this means that real estate prices and real estate interest rates are going to remain low throughout 2012, and buying in 2012 will be a great opportunity to get the lowest rate and the lowest price. This has been Alan Kendall. I hope you've liked this video.